The broadcast is now starting. All attendees are in listen-only mode.
This presentation is designed to provide an overview of our flagship managed money product, ETF Portfolio Advantage, which is available on various fee-based investment management platforms. Our company was founded in 1987, and we have over $3.5 billion in assets under management. And we provide a full suite of investment management services. Our core product, our core strategy, and what we specialize in is the ETF portfolio management solution that we're talking about today. We share the same values as our owners, which is to provide a very cost-effective investment management solution that provides a lot of value, and to also provide a high level of service to both the end user as well as financial advisors and other investment professionals using our product. Our ETF products, our ETF Portfolio Advantage series of model portfolios are not new. They've been around. Some of them were developed in late 2005. So we were actually an early adopter of an all ETF solution for managing portfolios for individuals and institutions. We have very good proven long-term risk-adjusted performance. As a matter of fact, we were written up on Forbes.com in 2009 in regards to our performance in 2008. And if you remember, 2008 was the year of the financial crisis and was not a pretty market for most individuals at all. However, we did actually have two of our ETF models perform in the top 10 of all managed ETF models monitored by Morningstar and then reported to Forbes. And as a matter of fact, one of those was actually the #1 managed ETF model in the nation that year. So we're pretty proud of that. And we believe that it goes to show that our investment philosophy works and provides very consistent returns over longer periods of time, which is really how people accumulate wealth. And we want to help them do that. Why do we use ETFs? Well, it's pretty straightforward. You're seeing a lot of other firms adopt ETFs. Obviously, we were pretty early to the game, but we decided that it made a lot of sense for our end user clients because of the low cost. So we use index ETFs in both the equity and fixed income space. And generally speaking, the internal expense ratios of indexed ETFs are much, much lower than the cost of actively managed mutual funds. So that's a big reason. They're cheap. We like them. Also, indexed ETFs generally are considered more tax efficient than traditional actively managed mutual funds. And the reason for that is that the portfolio turnover inside of particularly the equity index ETFs is quite low. Changes are only made to say the S&P 500 when the S&P 500 components change, and there's not usually a lot of movement from year to year in that list of stocks that are included in that index. Whereas actively managed mutual funds typically trade much more actively, so they can kick off cap gains in a much bigger way, and sometimes they even kick off a lot of cap gains in years that aren't particularly good for the stock market, and it perplexes investors when they get that tax bill at the end of the year. So anyway, tax efficiency is a key part of it. Another thing is trading. We love ETFs because of the tradability. We believe that it provides us with nimbleness in trading. So if we decide to rebalance our accounts in the middle of the day, because, say, the stock market's down 500 points, we can do so. With an actively managed mutual fund, you can't do that. You're going to get whatever the 4 o'clock close is. So those are some key reasons why we really, really like ETFs in a managed money account. We have 6 core models that range from 25% equities on the low side of the risk spectrum, all the way up to 90% on the high side of the risk spectrum. So we believe that you can take one of these models and fit it to the needs of most investors from a risk and return standpoint. Um, these models are actively managed, so they're not static. We'll talk a little bit more a little later about our primary method of managing those models. But be aware that we have some flexibility in these allocations, which allows us to add value. So, for instance, let's look at the balanced ETF model, which is in the upper right-hand corner of the slide there. And you'll notice that on the fixed income uh, portion of the account, the target would be about 50% of the account, and the equity target would be about also 50%. That's why it's balanced. It's half and half. But we do have the ability to overweight or underweight stocks depending on our outlook and current market conditions. So we can go as low as 40% in equities or as high as 60. Same is true with the fixed income. This gives us the ability to add a lot of value based on our outlook and economic conditions and the actions in the stock market and the bond market. And we believe that it's a big plus to your clients. So we do have the 6 models there, and income, conservative, balanced 60/40, moderate growth, and growth. We have a seasoned and credentialed investment management team, all of whom are CFA charter holders. We believe in managing by committee. We believe that putting our brains together to make these investment decisions adds a lot of value. People have different perspectives, and then we arrive at consensus on key strategies that we might need to make in the portfolio. But most of our portfolio managers have been in the business for quite a while, have weathered bear markets, corrections, and so forth, and that adds a tremendous amount of value, I think, in the long haul. In regards to our investment philosophy, one of the things that we believe in is being a non-proprietary shop. That is, we receive no compensation from any of the ETF fund families that we use, and we don't have any sort of in-house products that we've developed, and we don't intend to. So because of that, the universe that we can choose from is pretty wide open. So that allows us to be very impartial in deciding which particular funds that we look at and how we make those decisions. We, like I said, like low cost, so we look at that. We look at tradability. Are the particular ETFs that we're considering actively traded, where we could get out of them fairly quickly if we needed to, remove them because of a investment decision, or if we need to overweight them. We look at things along those lines. So that's a huge advantage, I think, to being a non-proprietary shop that receives no compensation from any ETF fund family. We also like the transparency of ETFs, and that for instance, let's look at, say, the S&P 500, right? So that's a core holding that we have, and we have a proven ETF in that area that's extremely low cost. But we know when we buy that, we know exactly what stocks are in there because it's just the index, right? Whereas if we were using an actively managed mutual fund that was similar, you're probably going to see some amount of window dressing at the end of the quarter, right? Because we don't know on an ongoing basis what's actually in that portfolio of the fund. But at the end of the quarter, when it's reported, a lot of times portfolio managers have a tendency to realign the accounts a bit to show that they own heavy or some positions in the stocks that have been in the headlines as winners for that quarter, and maybe lighten up on the stocks that have been losers, regardless of how long they held them or when they purchased them. So that transparency of ETFs we think is a huge plus. Also, we believe in being very transparent ourselves. So to that end, we claim compliance with the GIPS standards of the CFA Institute, which is a representation of our investment performance and the marketing of such. So we believe in transparency, and we're firm, uh, you know, deliverers of a transparent product. Our key investment philosophy is something known as opportunistic rebalancing. So what that means is we don't just mechanically rebalance our accounts once a quarter or so, like some firms do. Um, we rebalance them when we think there's opportunities in the market to do so. And at the core of what we do is, depending on the economic conditions at the time and our outlook for equity and fixed income markets, we typically buy when the stock market declines. We buy equities, that is, and we tend to sell equities as markets rise to reduce risk. And we do that to instill a discipline on ourselves of buy low, sell high. Now, within that decision, when we say underweight equities, then the decision is, where does that money go? And so sometimes part of the decision also involves a bit of a realignment uh, with, say, small cap versus large cap or international or various parts of the bond market to change duration and so forth. So we don't necessarily keep the portfolios totally static in the overall asset allocation. That is part of that opportunistic rebalancing strategy. We believe that this strategy has a key advantage to you in that it is very easy to explain to members, right? Other firms might have a different way of doing things that might not be quite so easy to explain to the end user client. So buy low, sell high is pretty easy to explain to them. And this is the discipline that we've had and that we've followed since day one. And this chart kind of demonstrates that philosophy over the last couple of years. And as you can see, in certain circumstances, it is tough to stick to that discipline when the market's going down, when people are panicking, but it has proven to pay off in the long haul. We also pride ourselves on providing an extremely high level of service to you and your clients. To that end, we're one of the few national investment management firms that provides you and your clients access to speak with our portfolio managers. So in most circumstances, you might only have access to a wholesaler who really is not involved at all in the day-to-day portfolio management decisions. And we believe it adds a lot of value. So we're very well equipped to do that. And that crack portfolio management team that you saw back there a couple slides ago do talk to members and clients all day long. We're glad to do that as part of the team's job. We also have support team that in the investment department that provides a lot of support services to the portfolio managers. There is available as well as our portfolio development officers that are located in various regions of the country. So accessibility to speak to a portfolio manager can help you when you're onboarding an account, and it can also help you with account service throughout the life of the account. And we think that's a key advantage that we've got. We also have an advanced planning support team if you need them. We can provide support in the areas of trust and estate planning because we are also a trust company and have been doing that for quite a while. We do have our national wholesaling team of portfolio development officers that I previously mentioned that are there to help you with your practice and figure out how we can partner together and how we can add value uh, to what you do. We also have a wealth of practice management education tools on our website, which you have access to or can get access to rather easily. That may be where you're viewing this video right now. But there's a lot of information there that can help you with your practice and you know literature, presentations, white papers, uh, things like we're doing today. We also provide monthly Outlook newsletters as well as an annual forecast newsletter that are very easy to use as a sales tool with prospects and clients. And we do provide a lot of webinar speakers these days for financial advisors that want to add some value to their practice. Those portfolio managers that you saw all do webinars, so we're glad to do that for you. And we also can do seminars when the time's appropriate, and depending on travel schedules and things like that, we can certainly do in-person events as well. So bottom line is we want to provide a very high level of service to you as you build your wealth management practice or as you expand an already successful wealth management practice. So feel free to contact uh, the regional staff in your area if you need anything. The chart that we've got up right now has various staff members' phone numbers and email addresses, and they stand ready to serve your needs. You can also call us at 888 727 9191, and one of these staff members or other staff members will be glad to talk with you about what you need help with and how we can help you with your wealth management practice. Thank you for the time today. We hope you found the information given to be informative and valuable. And let us know what we can help you with in regards to the expansion of your wealth management practice. Thanks for the time.